Hey guys, welcome back to another video from Mr. D and myself. I'm trying to teach him to be a good dispatcher, but I'm failing miserably because he likes to sleep rather than book loads. Now, as always, Mondays are dedicated to those weekly market updates and forecast videos. And as we probably have all noticed, as of January 18th or around that time last week, volumes crashed across the board pretty much. Some of you have even said that this is the worst crash that you have seen in a while. So let's go ahead and look at what is going on this week in the market. If you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market. So if this is a topic that interests you, feel free to subscribe down below. So as I was saying before, volumes crashed around January 18th. To top it off, a lot of you guys have been mentioning that you see that diesel prices are increasing, and you are absolutely correct, and we will see this on the charts we're going to look at on the board. So let's go ahead and look at the weekly market update to determine where the areas of opportunity lie. Ready? Let's go. So this week we're going to start by looking at this tree map which shows volumes. Now, as a reminder, the bigger the square, the more volume there is in that particular market area. If it's red, it means that the volume has dropped from last week. If it's green, the volume has increased from last week. So let's take a look at the Van Outbound Tender Volume Index. As you can see, this is a sea of red. Volumes are basically dropping across the board, although there are some areas where the volume did increase, specifically Detroit, Michigan, which increased by 22.8% from last week. Whatever the case may be, the markets with the highest volumes are Detroit, Michigan, then there's Philadelphia, Pennsylvania, and Cleveland, Ohio. So let's take a look at the screenshot from the board today. So the first place is Detroit, Michigan with the highest volumes. As you can see here, we have any van. See, this is for van from Detroit, Michigan. You will see that the pickup dates are for today, and you can see that there are 823 exact matches. So there's pretty good volume from Detroit, Michigan within 150 miles. Next, we have Philadelphia, Pennsylvania. Again, any van, Philadelphia, Pennsylvania. Let me make this bigger. And this is pickup today. And you can see the volume here is insane, 2,107 exact matches. Not bad at all. Finally, there is Cleveland, Ohio. And you can see again, any van, Cleveland, Ohio. The pickup date is today. And there are 1,468 exact matches. So what SONAR shows us is obviously applicable to real life. Now let's take a look at the reefer. For the reefer, it's not as much of a sea of red. There is a lot of green on the board. The top markets with the highest volumes are Fort Worth, Texas, Lakeland, Florida, and Chicago, Illinois. So let's take a look at the load board. And one thing I want to mention is you will see that even though these are the highest, they're nowhere compared to the van loads. The highest, Fort Worth, Texas, is at 56.89. Whereas for the van, it's 217.79, which is not surprising. Usually there are more loads for vans than there are for reefers. But let's take a look. First, we have Fort Worth, Texas. Now here we go. This is for any reefer from Fort Worth, Texas, and the pickup date is today. So we can see there are 475 exact matches. Not bad. Lakeland, Florida. Again, any reefer, Lakeland, Florida. This is for today, and there are 223 exact matches. Finally, we have Chicago, Illinois. Again, any reefer for Chicago, Illinois. Here is the pickup date, and we have 760 exact matches. Now, something to note, volume does not tell us what kind of rates there will be in a particular market area. It just tells us that there's going to be stuff on the load board probably. So if we look at this map, and this is for all equipment types, this is the Outbound Tender Volume Index. The darker blue an area is, the more loads there are in that area. Now, the map doesn't look wonderful. There's not a ton of dark blue areas here. But something to note, if you look here, the highest volume, the darkest blue, is at 379.45 this week. Last week, it was over 400. So the volumes definitely dropped. Now on to capacity trends. Now, usually I show you a heat chart, but this time I decided to make a heat map instead to help you visualize. So capacity trends tell us, for example, the darker blue an area, the tighter the capacity, meaning there are more loads than there are trucks, which means the carrier has the negotiating power. Now, this is for the reefer, and you can see that places like Idaho, Central California, there are places in Missouri, Indiana, the northern part of Texas, and Florida right here. These are places where there are more loads than trucks. Why? Now, some of you have cleverly mentioned that places like Idaho, for example, it might be because no one wants to go there due to the weather. In Florida, it might be because no one wants to go to Florida because it's really hard to get out. But let me show you an example. So Idaho, right? Here is a comparison for Twin Falls, Idaho. The blue line is the Outbound Tender Volume Index, so how many loads are there. And the green line is how many trucks are there in the market. So you can see that there are more loads than there are trucks, so the negotiating power is on your side. Now let's take a look at dry vans. Now for dry vans, it's a completely different story. It's much more favorable than for a reefer. As you can see, the map is pretty much blue throughout. Now, there are no real tight markets, only maybe right here near Arkansas or right here in Texas. No real tight markets, but in general, there is pretty much something to negotiate everywhere if you have a dry van. But of course, to understand what rates to expect in certain markets, we have to look at the tender rejection index. There is a correlation. The higher the tender rejection index in a particular market area, the more likely the spot rates are higher. So for the van, the highest tender rejection indexes are in North Platte, Nebraska, Omaha, Nebraska, and Cape Girardeau, Missouri. Now, something I did this time is I want to show you the tender rejection index versus the outbound volume. So this is for the van for North Platte. You can see that the tender rejection index is in blue right here, and the volume is in green. And what we can see is, of course, there was a peak at the end of 2022 because of the holidays. No one wanted to move loads, everyone was rejecting them, and now it kind of plateaued in 2023. As for the volume, it's pretty low. Now, this does not show us the exact number of loads versus how many tender rejections. This is just relative percentage-wise. So let me show you the load board for today for the dry van. Here's what we have. Now, this is, again, any van, North Platte, Nebraska. You can see it's for today. There is no volume in North Platte. There are 31 exact matches. Now, in terms of rates, we can see right here, I'm going to just move it over. You guys can't see this, but for example, from Sydney, Nebraska to Moxie, Washington, 1,198 miles, pays $3,200. So close to that $3 per mile mark. But if we look at this as a whole, we can see that most of these loads are going to the West Coast. There is Charlotte, North Carolina here, but it pays pennies, 1,499 miles right here to Charlotte, North Carolina, and it pays $2,300. So not great. I mean, yes, the tender rejection index is high and you can get a really good rate going to the Pacific Northwest, but not much going to any other area. So then we have Omaha, Nebraska, which is the second highest tender rejection rate. And you can see it's plateauing sort of. It did go down from the beginning of the year. So this is the tender rejection rate in blue, and in green, this is the volume. So the volume has been going down since about the 14th. So let's take a look at the load board. And again, you will see this is for any van from Omaha, Nebraska for today. So here, there are actually more matches. There is 339 exact matches, which means more volume. And of course, a ton of them are going to the Pacific Northwest. But let's take a look. So 1,756 for $5,100. But as you can see, everything here, it goes to the West Coast or to Florida, places that you really don't want to end up right now. So this is something I have been noticing this week, is that there is a real shortage of lanes of where to go. Finally, for the van, Cape Girardeau is the third best place when it comes to tender rejection rates. And you can see here that the tender rejection index fell on the 7th, around the 7th, and is now climbing up again. Now, in terms of volume, the volume remains elevated, although it is lower than end of 2022. So if we look right here, this is for van Cape Girardeau for today, we can see there are 782 exact matches. But again, everything goes to California, Nevada, Oregon, Washington, Nevada, Oregon, California, basically the West Coast all around. Yes, the rates are fantastic. We have $7,000 for 2,000 miles, $5,150 for 2,092 miles, not wonderful. There is, of course, Utah, 1,400 miles for $3,840. The rates are good, but there again, the lanes are really limited. Now, in terms of highest tender rejection rates for the reefer. Now, Bismarck, North Dakota, Fargo, North Dakota, and Pendleton, Oregon are the top three, but you can see that Bismarck and Fargo actually dropped from last week. So if we take a look right here, this is Bismarck, North Dakota. Unfortunately, they do not have the volumes for this chart, but they have the tender rejection rates. And what we can see here is that the rejection rate skyrocketed at the beginning of the year and is slowly going down. It did plateau a little bit right now, but it is slowly going down. Now, if we look at the load board for today, this is for reefer, Bismarck, North Dakota for today. There are 10 exact matches. So the volume is literally non-existent there in terms of loads. And of course, pretty much most of them go to Washington or Oregon. So for Washington, 1,205 miles, it pays $5,000. $4,000 to Georgia, 1,573 miles, and so on and so forth. Now, the weights here are ridiculously high also for a reefer. So Bismarck, North Dakota, yes, the tender rejection rate is high, probably because of the weather, like a lot of you mentioned, but there are just 10 loads right now. There is nothing to choose from. So the next place we have here is Fargo, North Dakota. Now, Fargo, North Dakota surprised me. The tender rejection rate is high, obviously. It actually went up in the beginning of the year, and while it's going down, it remains quite elevated, but the volume is really high and green. You can see it did drop, but now it went up again. So if anyone knows what is coming out of Fargo, North Dakota that I don't know about, I don't know. But if we look at the load board, we will see that the volumes are not bad. It's 109 exact matches. Again, reefer, Fargo, North Dakota. So there's good volumes and the rates are not horrible. Of course, to Florida, almost 2,000 miles, pays $6,200. Then there's California, 1,800 miles, pays $5,300. Not bad, but you can also find like to El Paso. Okay, El Paso is a little bit dead, but San Antonio, 1,471 miles, as we said before, which pays $4,500. Right? So yeah, what is coming out of Fargo, North Dakota that I don't know about? I tried to do some research, but I couldn't figure it out. Finally, we have Pendleton, Oregon, which is the third best place in terms of tender rejection rates. And we can see that the tender rejection rates, yeah, it's the best place, but look at how low they are. It's really not a good area, actually. The volumes are high. In the green, the volumes are remaining elevated in 2023, but the tender rejection rate, even though it's the number 3 top place, it's actually not that good. And let me show you on the load board. Reefer, Pendleton, Oregon, 64 exact matches. And you can see the first few loads are all team load, not much to choose from. If you want to go somewhere to the Midwest, such as Illinois, 1,913 miles, let's just do this. This is Ryan Transportation. It pays $3,600. So again, lanes are a really big issue. Yes, on one hand, there are places where the tender rejection index is high, but you're limited when it comes to choosing where to deliver. Now to this 3D map, just as a reminder, the height of a certain market area refers to volume. The higher the area is, the more volume there is. The darker the blue an area, the more tender rejections are happening in that market. This is for the van. Nebraska, South Dakota, Iowa. These are great places to be in terms of tender rejection rates. You will find good paying loads there. The question is, where are they going? But you will find good paying loads there. Texas is pretty okay in terms of tender rejection rates. Houston is good. Dallas area is dead. There's no tender rejection. Volume is going down. So this is the map for the dry van. For the reefer, you can see Idaho remains, it actually got even darker from last week. There are even more tender rejections. Again, probably because of weather, like you guys said. Utah is dying. The tender rejection index is going down. Then there is Dallas, Texas, or the Fort Worth area that has a ton of volume, but it kind of died in terms of rates. So this is the situation. Volumes are going down. Volumes are going down, and so are tender rejection rates. Finally, let's look at diesel prices, because a lot of you guys have been mentioning that you feel like the diesel prices have increased. You're absolutely right. This is just a map that shows you the highest versus lowest diesel prices relatively. Of course, California and parts of Nevada and the Northeast are the places where the diesel price per gallon is the highest. Right here in Texas, Oklahoma, Kansas, Missouri, Arkansas is where the price per gallon is the lowest, below $3.88. We can already see it went up. But if we look at this chart right here, this is the diesel truck stop actual price per gallon. Since I made the last video on the 16th, when diesel prices were still going down, diesel prices started going up, and we're now at an average of $4.66 per gallon. So yeah, not the best news for us in terms of diesel prices. So what have we noticed this week? Well, volumes definitely crashed and the rates kind of followed suit. For one of my dry vans, I did not follow my gut, and one of my guys ended up in Centralia, Washington. Bad idea. No loads, horrid rates. We had to deadhead to Albany, Oregon to grab a load to the Midwest for pennies on the dollar, because I'm thinking that the Midwest is really the place to be. And okay, we're going to lose money getting out of Oregon, but at least I'm going to keep him in the Midwest. I should have followed my gut before. Now, for one of my reefers, just on Thursday last week, one of my guys ended up in Dallas, Texas, and there were no loads going anywhere except for the Pacific Northwest. I mean, there were loads posted to the East Coast or Midwest, but by brokers that are either double brokers, have no credit score, or whatnot. Basically, what I noticed this week is that lanes are limited, even when you're in an area where the tender rejection index is high. Yes, you can get good money getting out of that area, but you're going to be going to a horrid place because there's nothing else going anywhere else. In terms of diesel prices, yep, I'm with you. I noticed they went up. Just yesterday, I was looking for fuel for one of my guys who was in Waco, Texas, going to South Carolina. I was looking something along the route, and the prices that I found in Texas were between $3.90 per gallon to over $4.10 per gallon. And that is really high in comparison to what it was a week ago. Basically, it's time to buckle up and hold on tight. It's going to be a bumpy ride for the next few weeks. Anyway, guys, thanks for watching. We both really appreciate it. I hope this video did shed some light on the current market situation. I hope that Mr. D brought some comic relief to the current less than desirable situation, and I'll see you all in the next video.